Global Growth Outlook. So at this point of the presentation, now we will start to present new information to the client. So I would typically slow down a bit because the client would generally have questions to ask on each of the important points that I would raise from this section onwards. So now we're heading into the meat of the presentation. So as I mentioned before in the preliminary chapters of this course, the global growth and outlook section is usually what you just do to provide value to the client, just to get in their faces often and remain top of mind with the client. So you can do these presentations for free as just an information sharing, a quarterly update on where we see as the consulting firm or bank, where we see the market and what we see the industry doing presently. So these companies that you're presenting to don't have the budget or the resources to devote to research uh, these topics in the depth that you do. So they find these quarterly market updates very useful, and they don't see it as a waste of time at all. It also allows you to constantly be in good interaction with your client, to ask them questions and to probe for opportunities that may not be apparent now, but maybe in the next quarter, something comes up during that discussion and spurs an idea that is potentially profitable or lucrative in the future. So it's always important to be top of mind and to have a good relationship with your client, to be seen as always adding value. And these are actually very good information sharing sessions that you can offer to your clients for free in order to maintain that relationship and to grow it. It also highlights your firm's expertise and your knowledge about the current state of the world, and it's very good for rapport building. So let's hop right in. So our analysts predict a continued upward trend in US economic growth in the next 1 to 3 years. This is forecasted to be primarily driven by additional consumer spending fueled by government stimulus packages. The strength of the world's largest economy is key in ensuring sustained global optimism and continued upward trajectory in equity markets around the world. So basically, our house view is that the Fed will do everything in its power to maintain robust equity markets. So we don't necessarily see the Fed's actions in terms of slowing down its balance sheet growth as something that can be sustained, although the Fed has currently begun its tapering efforts and it's indicated a new cycle of interest rate hikes and balance sheet reduction. We do view the actual equity markets themselves as being highly fragile and highly correlated to the Fed's balance sheet expansion activities. So, as a house view, we see the Fed potentially going forward with the strategy until something breaks. We don't believe that the Fed can actually accomplish 6 more interest rate hikes over the coming year, as they have indicated. So that's our internal market view. The markets haven't really responded in the way that was expected. We were expecting a severe, drastic pullback after the announcement of the budget or the balance sheet tapering. But in effect, what the balance sheet reduction actually does, or what it actually means, is that the Fed will still continue to buy treasuries, but at a slower rate, and it'll allow the treasuries that are currently on its balance sheet to just roll off. So it's not necessarily to say that the Fed will actually sell off the treasuries on its balance sheet. And when the Fed sells treasuries, what this causes is it causes the prices of those treasuries to reduce, and because interest rates and the price of treasuries are inversely correlated, what that would mean is that interest rates would go up as the Fed sells off its treasuries on the balance sheet. But aside from that, what we believe is that the selling won't be majorly significant. They have indicated about $95 million a month in roll off of the balance sheet, but they said up to $95 million. So our house view is still robust equity markets. We don't believe that the Fed would do anything drastic that would jeopardize the robustness of the equity markets. Okay, so as you see, what I did from this paragraph, I then went into a very detailed breakdown of how we came to this conclusion, which was which was not necessarily reading off all the information on the slide, but maybe some of the points that I touched on will be covered subsequently in the slide. But it's very important to talk to your clients and not necessarily just read off the words from the presentation. Now, obviously, I would read body language, and if there was something in the eyes of the client or in the body language of the client that suggested that I explain something again, I would reiterate and re-explain that point again. But let's assume that you, as my clients, were comfortable with everything that I've said thus far. Then I would just continue. So we'll just dive in more detail. So as we mentioned earlier, the next the house view for the next 1 to 3 years is a strong U.S. economy coupled with a strong dollar, and the underpin is the following: the U.S. economy is primarily consumer driven, and the U.S. government will do everything in its power to maintain that strong consumer demand, whether it means social payments, an extension of social payments or furlough payments, moratoriums on debt repayments, or moratoriums on evictions. The more Americans spend, the higher the resultant US GDP will be, and hence overall confidence in the economy. So, what we are still seeing as well is a very robust employment market in the US, with unemployment levels continuing to fall, as is highlighted in this graph. And this provides underpin for our bullish sentiment for a continuous recovery in the US economy going forward. So basically what this means is the remainder of this presentation is going to focus on the prospects for copper, gold, and oil, which are key inputs in the company of ABC Mining. So copper and gold, gold being a byproduct that is mined with copper. So these are your revenue line drivers, and oil is a major cost item to the company.